Welcome to How Stock Trades. Boy, do I have something to tell you. As of now, by now, if you're watching this video, you've already heard that Clover Health hired this gentleman here as their new CFO. This gentleman is coming from a company that's publicly traded called Clover Health. In this video, by the end of it, I'm going to convince you why Wall Street respects this guy. How this guy is going to help Clover. Now, if I were to say this news from 0 to 10, how bullish this is, it's a 20, okay? So we're going to go over his past, then we're going to analyze and do a fundamental analysis of Clover Health, and I'm going to show you how Wall Street is going to start valuing and taking Clover Health seriously. So this gentleman, Mr. Scott here, holds a BA in economics and history from Yale. So there's some connections with other people on the board for Clover because they also work at Yale as well. He holds an MBA from Emory University, is a currently an active CPA, and also a certified treasury professional. He's had a decorated history as working as VP and other aluminum packaging organizations, but the main one we're going to be focusing on here is that he is now former CFO and treasury of Clover since 2017. So right now it's 2022. So we're looking at a 5-year work experience as a CFO. So I'm going to go ahead and just quickly decrease my size here. I can just actually increase it here. And we're going to go in and take a look at Clover Health, ticker symbol SHC. So you can look up this company yourself. So this now new Clover CEO came in at 2017. He helped the company go public recently. But if you look at it, Clover, I want you to look at the net income here. If you look at the net income, he took Clover, again, he came in 2017. He took Clover from net income negative to net income positive, okay? Which is exactly what Clover needs to do. Furthermore, he took SHC, Clover, from $47 million in free cash flow into a free cash flow juggernaut, literally 17% of the revenue, almost like a SaaS-like Palantir revenue multiple, if you were to say, in terms of the level, because normally how we do 5 to 7% of the revenue when we estimate Clover Health stock. This is 19%. See how powerful the CFA has been able to assist the company management in being able to go and to become profitable? If you look at the gross margins here, he was able to take it from 47 to 55%. If you look at the operational margins, you can see it's going in the right direction. And the shares, minimal dilution, okay? So it's very clear that the CFO is extremely talented in what he does. And he's able to command respect in Wall Street analysts. And this is exactly what Clover Health needs. They're slowly growing into their shoes as a publicly traded company. So what we're going to be doing now is what I want us to do. I want us to take a look at the SHC stock. And if you look into it here and look at its maximum here, we had a low of $18 and a high of $27. And again, they just recently became public. Again, Mr. Scott was, this gentleman here, has been able to bring them into becoming public. And as you can see, the stock hasn't really been deep. If you look at it in the past 6 months, it's only dropped 5%. It shows you the command that Wall Street has for this gentleman. The type of respect he's able to bring in, the power in terms of what he's able to accomplish with the company. So what we're going to be doing now is we're going to be doing an intrinsic value calculation on the stock, and we're going to see what's the price of it. Why did he leave? And is his work and him and his balance sheet able to translate to Wall Street's price targets, and is able to do some work in terms of being able to take all that hard work and the fundamentals of the business and gain Wall Street's trust to being able to set higher price targets so the stock can ascend to its intrinsic value. So let's, without further ado, let's get to it. So, and I'm going to be, you could pause and take a screenshot of the numbers, but I'm going to be using those numbers. I have them pulled up on the computer screen to the left of me here. So in 2018, we're going to be using revenue here, and then we're going to switch to the net income. They made around $746 million. Let me go ahead and refresh this. And again, if you want access to our intrinsic value calculation, our book value calculation, intrinsic sell calculation about telling you where to sell, and our lifetime one-time payment mastering stock market course, which will elevate you as an investor and teach you Warren Buffett type of investing, I highly recommend you go down and check the link down below. We have been featured on all of these amazing news articles, Bloomberg, NASDAQ, Yahoo Finance, as our results and our platform speak for itself. So we're going to go in here and we're going to type in 2018, and they made $746 million. In 2021, they made $931. So they're growing at 8%. Right? Based off of the revenue for the past 4 to 5 years. And, as you can see, it's not as impressive as what one might think. But if you look at the free cash flow here, and it doesn't matter what year you place it in, you just drop it in. 47 just takes the average. 47, 92, 67, and these are in millions, of course. 179, and that's about it. And then we're going to go in and put the shares outstanding, which we said was 280 right now. We can see the stock price's value is anywhere between $3.83 to $6.60. And you can see that it is trading higher than that, right? Because it shows you the trust that this Wall Street and Wall Street firms have as they've been putting price targets on the company. So now if we were to switch gears and not look at revenue and say, you know what, I'm going to go in and I'm going to take a look at the net income. If you look at here in net income, we're going to be taking 2021, and as of right now, 2022 again, TT, trailing 12 months, it hasn't ascended up to its higher value for the end of 2022. But we're just going to be taking these numbers here based off of what we have, and we're going to just going to say 2021 to 2022. We're just going to take 1 year because it doesn't make sense. How does a price target, this company, have anywhere between $4 to $6? You're getting a price target of $20 right now, and this is the movement for today. You know what I mean? So we'll calculate that. So in 2021, in the net income side, they had 117 mil, and in 2022, because we're going to do this year, they had 137. So as you can see, they're growing 17%, and the price now goes anywhere between $7 to $13. So I know what Wall Street's doing. They're saying, you know what, we trust this guy. This guy's company is going to be successful. Look at the gross margins and everything. It's free cash flow positive. We're going to go in, and we're going to assume they're going to make higher than this $818 million in revenue. And we're going to go ahead and knock down these low numbers. In fact, they're going to knock down these ones here, and they're going to add the 159 as the free cash flow. And as soon as you do that, watch, as soon as you do that, you go in here, you put 159, and then you delete these numbers. As soon as you do that, look at the stock price. It goes anywhere between $12 to $23. Look how many assumptions Wall Street is comfortable in making to get a bullish or near bullish stock price for this specific company. It shows you the command it trusts. But as you can see here, no matter how you dice it, no matter how you play with it, it seems to me that this company is near fair value. And I personally won't invest in this company. And as a CFO, he did what any good CFO and what any smart, opportunistic person would do. He said, you know what? I've done the best I can with this company. Obviously, it's going to continue to increase in share price through the amount of 8% as they've been growing. Wall Street already knows their revenue estimates for SHC is going to be around 2023 is going to be 8.9. So we already know that that's going to be the intrinsic value of the company, and that's why he left. So now his job and what he's going to be doing is he's going to be taking Clover Health to the next level to becoming net income positive, to becoming free cash flow positive. But here's the thing, we already know that. We've already heard the CEO said that their goal is to make the company profitable by 2023 and free cash flow positive. But now they have the guy to do the job even better, who has done the job before and who has Wall Street's respect. Okay? So it's a big deal. And on average, I personally think the stock price here, this is what it's worth to me, anywhere between 7 to 12. I think it's overvalued right now, the company he's leaving. I think it's a perfect time to leave. And that's about it. So if you enjoyed our intrinsic value calculation, if you want to calculate the value of your own stocks, learn how to be a fundamental investor, not go into the stock market blind, and actually get my 10 years, now 11 years worth of experience, there'll be a link down below to our Mastering Stock Market course. And there will be some links on all the articles that we've been featured in and all the success that our platform has accomplished based off all of the positive reviews and the proprietary information that we've accomplished. And I'm very proud of it. There's going to be more stuff added where it's currently 50% off. There'll be a link and a coupon code down below. And don't forget to check out our now currently 6 free stocks at Webull till the end of May. So get your free stocks, and please leave a comment below on what you think of the new CFO. And anything that you want me to know to analyze, I'll be happy to take a look at it. As always, it is a privilege and honor, and I will see you guys on the next one.